The scientific way to approach ideation of business is, the first step is do a personal SWOT analysis. Yes, strength, weakness, opportunities and threats. Next aspect is core competency analysis. Now, what is this core competency analysis? Now, every person possesses certain particular competency. Business is all about bringing in the best of competencies and delivering to the customer and to the other stakeholders. Again, there are multivarious competencies that are required in conducting a business, successful business. The ideation should go along with, on one side, your strengths, then the core competency that is required for a particular business. Please go ahead and think, introspect and write down the purpose of doing business. And if you are not able to define it, work on that. Work hard on that till you are able to arrive at your purpose. In the earlier episode, we spoke about the strength and core competency. The strength, core competency and purpose should go together, and then only you will be able to work towards your passion and you will have much clarity in getting into your business. A vision normally can be taken as like, a 5-year horizon at any given point in time. So usually it's a 5-year vision which an entrepreneur can fix as to, at the end of 5 years, what should be the various achievements for the business and how do you want to do it and what are the various things to take it there. This is what to be defined as vision and mission of the organization. What is important is, even though there are multiple forms, for you to decide which is better for you, various criteria are there. Let us look at quickly one by one. First principle we need to keep in mind is, whichever form you want to run the business, you are different from the business. Please keep it in mind. The entrepreneur is different as an individual. The business is different as a separate entity. That clarity should be there. Many a times, entrepreneurs will consider them as one pocket and business as the other pocket. It's absolutely not advisable to think like that. Treat your business as a separate entity. That's point number one. Second thing, cost of creation and maintaining the organization. As already I told, proprietary concern and partnership firms are less expensive to create and maintain. But it comes with unlimited liability. But a private limited company or a public limited company, the cost of creation and maintaining is very high. Cost of compliance is very high. There's so much of hassles of compliance. But it has its own advantages. Take a balanced view on that. Already we spoke, we need to have a clarity about at least 5-year vision. Now break that vision into bits and pieces and nuts and bolts. That is what is strategic business plan. It is just not about an Excel sheet work. Just putting a 5-year projected revenues in an Excel sheet is not going to bring success. When I talk about strategic business plan, it has to be a much more detailed working with complete description of all the factors and all the various resources, all the parameters have to be brought into the strategic business plan so that it becomes like a core document for implementation. About annual business plan, its importance and its ingredients. So as the name itself is suggesting, this is basically for the ensuing financial year. What is going to be the business plan? Right. Broadly, it will be guided by the strategic business plan and the vision document, and much more detailed in terms of defining the various elements of a business plan. So the more details you are going to include in a business plan, the chance of you being successful in implementation is very, very high.